Kevin, welcome. Kevin Cummings was appointed chairman of the board of directors and chief executive officer of Investors Bank Corp. And Investors Bank effective May 22nd, 2018. He previously served as president and chief executive officer of these companies since January 1, 2008, and was appointed to serve on the boards of the same date. Mr. Cummings and the executive management team are guiding bank's evolution into a full-service community and commercial bank. The bank's performance was recognized on Forbes' Best Banks in America, listed for the last 8 years, beginning 2013. In addition, Mr. Cummings is past recipient of the Ernst & Young Entrepreneur of the Year, New Jersey Award for transferring the bank into a growth company. I'm going to cut this a little bit short, as I say, because we're running a little bit late. Prior to joining Investors Bank, Mr. Cummings had a 26-year career with KPMG, an accounting firm, where he became CPA and partner. He was an audit partner in the financial services practice in New York office and lead partner on major commercial banking clients. Mr. Cummings was worked in the New Jersey community bank practice for 20 years, serving many clients throughout the site. Mr. Cummings serves on the scholarship board for inner city children, St. Benedict's Preparatory School, the Federal Home Loan Bank, Greater Trenton, New Jersey Business and Industry Association, and the Community Foundation of New Jersey. In addition, he has served as former chairman of the board of New Jersey Bankers Association. He holds a bachelor's degree in economics from Middlebury College, and I understand was one of the star basketball players there. He earned an MBA from Rutgers University School of Business and gave the commencement address to its MBA graduating class in 2013. He and his wife, Patricia, have 4 children. In spare time, he has coached youth basketball in his local community and has served as the athletic director of St. Teresa's Avila Church in Summit. Kevin, welcome.
Okay. But, I want to talk about my journey over the 40 years as a CPA and a banker, talk a little bit about banking during this pandemic. It's been a most unusual year and what impact it may have on banking and business in the future. And also spend some time discussing how Investors Bank has reacted to the pandemic and all the good things, hopefully, that we continue to do in the communities that we serve. I would also like to discuss what it means to be a leader and how leadership is about service, how it is possible to put others first, treat people the way you want to be treated, and still be successful in business. But first, I'm going to comment a little bit about the economy and the outlook of the economy for the future. And I have to preface these comments because first and foremost, I need to let you know that I'm a CPA by trade and I have a keen sense for the obvious. I'm not really looking forward that much. I'm really looking backwards. But as a banker, we have to look forward. And 2020 was one of the most unusual and turbulent years, with the pandemic, the shutdown, social unrest, and the election. And last year, in my mind, it made the late 60s look like a walk in the park. And just think, a year ago, we were afraid to go to the grocery store, open up packages, or pick up our mail, or even touch a doorknob for that matter. I was washing my hands every time I touched a doorknob when I came into the office. From an economic point, the key legacies of this pandemic will be more debt and higher inflation. It will lead to greater use of technology, as we see in the banking business today in the last 12 months, and it will continue the intensified pushback against globalization. This virus caused a sharp drop in the supply capacity of the economy because so many businesses were forced to close. This capacity is and should return quickly as the lockdowns are eased and things get back to normal. But in certain industries like the hotels, airlines, entertainment, theater, live entertainment, it will be a little bit slower. Demand should also recover as the high level of savings and fiscal stimulus will power the consumer and businesses in the short term. As such, GDP should return to pre-virus levels, hopefully sometime next year. But more importantly, behavioral changes are likely to be permanent and could have positive effects. They include greater use of technology, especially in the workplace, more spending online, the reduction in the use of cash, and a shift towards working from home. This technology will drive a pickup in productivity. The Fed will probably keep its policy rates at near zero well into 2023 and will be very cautious when it begins to move, as opposed to 17 and 18 when we saw 7 rate increases. The Fed's recent adoption of a flexible inflation target and the greater concern with full employment are clear signs that they are ready to accept a higher rate of inflation in the future. I don't think we're going to go back to what most of us had experienced in the 70s, but certainly we're going to see a higher rate of inflation, and deflation is going to be less of an issue. The aging of the population in the US will hinder annual labor growth and will be a strength on GDP growth. But with productivity growth expected from the technology advancements, we expect productivity to average around 2.2%, which would be a major improvement over the last decade. So the potential growth of the economy should be about 2.5%, which is certainly an improvement through the end of this decade. And despite all the noise we hear, from our politicians in Washington, Trenton, and Albany, I think the U.S. is well positioned to have a strong decade and should continue to be the leading economic force in the world. In fact, I've read a few times where by 2050, this one economist I was following with the Capital Group, they do not expect China to overtake us. I think we need to survive the next few years until we can get a balance of power back into Washington. It is never a good thing when one party controls both sides of the aisle. And I think having that balance in Washington is a good thing, because hopefully they'll compromise. And at the end of the day, I think, I always listen to Warren Buffett, who said, "Don't bet against America." And despite all the issues in this country, it is still the best place to live, the best country, the most generous country, and a great place for business to develop new technologies and create great opportunities for its citizens. At the end of the day, despite 2020 being one of the toughest and disruptive years in my lifetime, I'm certainly very optimistic and look forward to brighter days and greater opportunities as we move through this decade. That's enough, I guess. We can talk about the economy further in the question and answer period, but now I'd like to move and share with you some of the lessons that I've learned from my journey in business. From a kid from Jersey City to a CEO of a public company with a market cap of almost $3 billion. Certainly we live and work in a complex and competitive society. And sometimes the struggles of doing business in today's world can seem to be put us at odds with the principles of having a good and moral life. And I think it's our society, this material-focused culture that we live in today, after the greatest generation, often challenges our journey to become the best person we can be, or the best version of ourselves. And as business people, it can be a challenge to reconcile our values with real-world business decisions and dilemmas, layoffs, cutbacks, whatever it might be, with as what we do for the greater good in our communities, how we impact individuals with some of the decisions that we make. But business is life, and it's really, life is our vocation, and business, whether it's a banker or a CPA, is what we've been chosen to do. And work is a big part of it. And at the end of the day, the good Lord's plan does not want us all to be monks in a monastery. Human nature and the journey from a selfish self-centered child to a selfless, unselfish adult has not changed over the years. We are born into this world with broken equipment, and our journey is not to compete with each other, but to compete with the person that we were yesterday. I don't want to be better than anyone on this call today, but I do want to be better than I was yesterday. And it's that attitude, I think, of constant improvement that has served our bank well in our journey, going from a mutual of about $5 billion to a mutual holding company that raised $500 million in 2005 to doing one of the largest IPOs in the history of the thrift industry of $2.2 billion in 2014, and growing from $5 billion to $26 billion today. But that journey, and our journey in life and in business, is one of continuous growth and improvement. And the joy is certainly in the journey because, as John Wooden often said, the journey is the destination. So how do you run a business and do our jobs and do it with integrity and in the right way to do it? How do you build and practice high ethical standards in this hyper and ultra competitive world where some guys may be bending the rules? Is there a way to integrate the sacred and the secular aspects of our lives and still be successful in business? And I often joke, do I live by the golden rule of banking? I have the gold, I make the rules. Or do I live by the golden rule in the Bible? Treat people the way you want to be treated. Treat people the way you want your mother to be treated. And these are some of the questions I've asked myself over my career. And what I found is that when you focus on being of value rather than success on the next transaction, when you focus on being of value, a lot of good things happen. After all, when you strive solely for success, we're actually only thinking about ourselves. What's in it for me? Our egos. We are being selfish instead of selfless. But when you aim to be of value, you are directed towards the well-being of others. You are striving to be of service to others and to society for the greater good, for the greater purpose. In their book, The Go-Giver, written by Bob Berg and John Mann, the authors discuss what they come up with 5 inevitable laws of success. And they have one they call the law of value. Essentially, the law of value says that your true worth is determined by how much you give in value than you take in payment. And this rule, it seems to me, is the basis for good business relationships and, more importantly, fair business relationships. At the same time, it embraces the philosophy of service that is aligned with the teachings of one's faith. You know, I'm certainly a product of a Catholic education. I grew up in Jersey City, a working class family, where my parents made sure all my siblings and I attended the local Catholic schools, both St. Patrick's and St. Aidan's. And then I went on to St. Peter's Prep, where the good Jesuits instilled in me a strict set of values and a faith I will own for the rest of my life. And it is this faith that has guided me, hopefully in my business life and in my private life, to be of service to others, whether it's the community, family, or businesses, customers, co-workers, a sense of mentorship. And throughout my career, service and hard work have always gone hand in hand. And I remember a quote from St. Augustine, who once said, "Pray as though everything depended on God, work as though everything depended on you." Hard work never gets old-fashioned. And I think my parents must have known that. They were hardworking people committed to only faith and family. There was no discussion of career. It was just faith and family, and do what's necessary to make sure your children got the best that they could afford. And in my view, I won the parent lottery. They set the example of how I should live and work. And they clearly understood that people, maybe not like some of our politicians, but people do what they see and not what they hear. And as any good leader knows, you need to lead by example. My father was a Jersey City police officer who held a second job as an iron worker. He taught me by example what it means to be dedicated to both career and family. And in addition, mentors also inspired me. In high school, I played for a great basketball coach, a guy named Jerry Halligan. He taught me many lessons, how to be a good teammate, and perhaps unknowingly prepared me for a career focused on hard work and service. And throughout my career, I've been fortunate to find business or professional mentors who I've looked up to. One is my former chairman here at Investors Bank, Bob Cashel, who lived and worked by the motto, you can do good and do well. And you know, it's important to recognize all these people because they were excellent, excellent role models for me. They taught me what it meant to be fair, be trustworthy, and to be truthful. And in this digital world, with all the emails and remote working, we cannot underestimate the need for and the importance of mentorship. And by their decisions and actions in business and in life, they were always based on what was most beneficial for all concerned. They put others first, and they're great examples of what it means to serve others through one's work, through one's vocation. And service, whether it's at home, at the job, in your community, it's a good thing. But what about the material rewards that sometimes come with it? Some people might say that financial success in business goes against one's values and the spirit of social justice. Should I try to maximize my salary? Should I be looking for the next job? But nothing could be further from the truth. God didn't make junk. We're responsible to strive to be the best that we can be. And I get a quote from Conrad Hilton, the founder of the Hilton hotel chain, who once said, in my Bible, it doesn't say that money is the root of all evil, but it's the love of money that is evil. And Hilton based both his business and his philanthropic philosophy on his most enduring influences, very much like me, on his parents and on his church. And I found that in my own personal business career, success is linked, leadership is linked, success is linked to service. And I'm humble and grateful to think that this kid from Jersey City, who has lived in Summit for 40 years and in the same house for the last 37 years, gets to lead one of the largest banks headquartered in New Jersey. However, I am also keenly aware that leadership brings with it great responsibility. Because when you think about it, what is leadership? First and foremost, leadership is influence. And influence is a powerful force. I spent a good deal of time deciding what kind of leader I want to be. And I've reflected long and hard on how to bridge my own personal convictions with the capitalist business model of seeking greater returns for my shareholders. And one of the questions I've often asked myself is, can you be successful in the corporate world and still do business by a set of values aimed for the greater good? And what I've discovered, it's not only possible, it's preferable. And the secret to achieving that kind of success, to being that kind of leader, can be summed up in 3 words: put others first. The best leaders put the interest of others ahead of their own. You know, we can choose any day, right now, to be leaders who serve. And it's as simple as asking yourself, what can I give that person instead of what I can get from that person? When you truly care about another person and put their needs first, they follow you, they trust you. You create credibility, not because they want to or told to, but because they want to. And I've learned that it is the servant leader not the self-serving leader, who wins trust, respect, and loyalty, and then has longevity. We're all familiar with the adage, the more you give, the more you receive. It's a concept that spans the Bible, and it certainly applies to my personal life. And I believe it applies to Investors Bank too. And when I look at what the bank has done, there is no doubt that the more that we've done for our community, our customers, and our employees, the more we have prospered. 2020 was an unusual year, but we made 2020 a year of strong financial performance for the bank. And in the past 6 years, we grew our assets by $11 billion to over $26 billion. And we are one of the strongest banks in the country. Our fourth quarter of 2020 was the best in the history of the company, with core return on tangible equity of 13% and quarterly earnings of $84 million, reflecting a 1.27 ROA for the fourth quarter, which were record numbers. But 2020 was a most unusual year. I mean, just think where we were a year ago when New York was shut down and the governors of New York and New Jersey shut down both states. It was a tale of two cities. And during the pandemic, we had to act quickly and pivot and reset to address the new normal. Safety for employees and customers was our top priority, followed by efficiency in all our technology processes. And technology was really the key factor here to success. Our IT department implemented technology solutions so our corporate and back offices could work seamlessly and safely from home. We did all this in 7 days, from about March 11th to March 18th. We also embraced and expanded our usage of Microsoft Teams and Zoom for external and external client meetings. We had one meeting this year attended by over 700 people. It was a seminar hosted by Steve Adubato with Boomer Esiason and Phil Sims and myself. And we had 700 customers on the call. And in addition, our NICE team, our customer service agencies, all worked remotely and handled significantly more customer calls due to COVID-19. We kept all 150 branches open. And in June, we were able to get everyone back to work in the branches. During that period of March, April, and May, we had appointment by customers coming in by appointment and the drive-up windows, because we had a safety first was the protocol. But on June 6th, we opened up the normal operations, one of the few banks to open up in early summer, and we've been able to keep them open throughout the spikes in the pandemic over this period of time. In addition, we closed on an acquisition on the weekend of April 3rd last year in Nassau and Suffolk County, when we acquired Gold Coast Bank with $600 million in assets. The pandemic created real economic hardships for many of our customers, both consumer and business. And we were able to help them through this crisis by deferring loan payments and waiving late fees. Throughout the year, we worked with our customers to provide solutions that they needed to get back on their feet. In fact, in the first quarter of last year, the reporting period, we had $3.6 billion in commercial loans that were on deferral. And this was a combination of cooperation from the government, the federal regulators, and the CPAs, which allowed us to postpone payments and not put them on delinquency, and not, most importantly, treat the loans as troubled debt restructuring, which would have precipitated a mark-to-market of the collateral securing the loan. We also did a lot of business with the Paycheck Protection Program. Bankers across the bank, many working around the clock, processed over $350 million in PPP loans, with approximately $40 million going to not-for-profits in our local markets. These loans helped save close to 35,000 jobs in New Jersey and New York. You know, the many things we did, it wasn't just on the banking side that we did. We gave a budget to all our branches of $2,000, $300,000 in total, and we told our branch staff to go out and reach out to the elderly, to the shut-ins, and many of the most vulnerable in our communities. And throughout the pandemic, the compassion of our employees, they showed what they showed for our customers, not only surprised us, but humbled me, because they were out there checking on the elderly, making food deliveries to first line healthcare workers, and volunteering at soup kitchens. And the investors' employees really outdid themselves and truly lived the spirit of our core values: character, commitment, community, and cooperation. And that spirit of giving back certainly will be part of our legacy and will survive this virus. Our efforts were recognized in the largest survey of bank customers in the world, the Rival Banking Benchmark Survey. In March 2021, investors' performance during the pandemic ranked second among New York banks and was in the top 10 for New Jersey banks. So, despite, the adversity and all the problems and the heartache and the uncertainty, really, the fear, one of the lines I used around the bank was be faithful and not fearful, be hopeful and be optimistic. And that message was continued in communications with customers on our website, communications internally on our internal websites. The pandemic, will certainly have significant impacts on banking. And in banking today, especially in New Jersey, we operate in the most competitive markets in the world in an industry where sometimes our products are very much commoditized. Banking is undergoing, and the pandemic accelerated it, a digital transformation, and products are getting pushed toward digital delivery with the goal of bringing everything to the iPhone for both retail, business, and commercial customers. We were lucky we made significant investments in 18 and 19 in our digital banking platforms. And we continue to enhance our omni-channel banking experience, enabling customers to bank how, when, and where they want to. And it reflects on our continual commitment of putting the needs of our customers first. We have implemented several changes across the bank. We have an innovation station, which is a group of cross-functional thought leaders who we brought together in a think tank where their only job is to lead the charge of continually transforming the bank by enhancing our channels and the experiences to ensure it is consistent across all channels of the bank, the branches, digital, and telephone. And make sure, more importantly, it's customer friendly. We have the improving the customer experience. We call it NICE, now improving the customer experience. And it is an internal team that looks at all our policies, procedures, and processes to make our employees' job easier, and more importantly, to make it easier for our customers to bank with us. We have a motto here at the bank: you either serve the customer or serve someone who serves a customer. We are building a culture where the customer experience and the user experience on all channels are first and foremost in our mind. We're always talking about what's going to happen with the branches, and then I think the brick and mortar will not go away. But I think when you look at the New Providence branch, the Summit branch, you won't see those branches being built in the future. We'll see smaller branches. Branches will serve as a billboard to the millennials, but branches will also serve the need when a customer wants to speak to a banker in person, such as one of our investment representatives, mortgage reps, or business bankers. Branches will need to be smaller in size, but will remain an important channel for our customers to bank with us. Our de novo strategy involved the opening of 3 new branches in Montclair, Forest Hills, and Williamsburg, and they both have a different feel to them, about 1,500 square feet versus about 2,500 to 3,000 square feet. It's a cross-generational customer appeal with a bright open floor plan and no counters. Convenient banking pods seamlessly merge traditional banking services with our full suite of online banking tools and mobile apps. The future of banking will evolve around the speed of moving money, which is moving towards real time. An example of this is Zelle, which is a payment service we offer that allows people to pay and receive money within minutes. And I think the real-time movement of money will also bring about one of our focuses, cybersecurity and safety. There are plenty of bad actors out there, and banks will have to continually be one step ahead with investments in cybersecurity technology to protect our customers, as well as safeguard their personal information. That is first and foremost one of the biggest issues facing the banking industry and generally business today. So when you think about what we've done, our growth is certainly a sign of our success. But as our former chairman says, it's not enough to be successful. We must be significant. And it is moving from success to significance that allows a company to create a purpose and a legacy, one that has a lasting impact on the people we serve, our employees, our customers, and our communities. And if you take care of those three constituencies, you'll have a successful business operation, a successful bank. And pure and simply, the purpose of our bank, of Investors Bank, is to serve others. Banking is a service business, and our goal has always been and will be to provide superior service and products each and every time. I'm proud to say that Investors has remained, even though we've grown to 26 billion, we've remained true to our roots as a community bank. We work hard to contribute to the prosperity of our local communities. And simply put, it's a win-win strategy. It's part of our brand. It's part of our strategy. It's part of our brand, and it's part of our business model. It comes down to doing business in a way that's most beneficial for all, and it's embedded in our core values. And when you think of those core values, I think of the 5 key attributes or habits of a business leader. And I want to share them with you because I think it's things that we can pass on to the next generation. And those habits, the first, as I said, first is character. Your reputation is what others think of you. Your character is who you are and what you stand for. The next habit is hard work, and it never becomes old-fashioned. And in this current economy, it's even more important because of the intense global competition. Third, and this one's certainly overlooked a lot of times, is a sense of humility. And it's not all about you. Get over yourself. Be a giver, not a taker. I call it the Derek Jeter rule versus the A-Rod syndrome. And I often look at Yogi Berra, a New Jersey icon, and what he stood for. What better compliment can you get than being a good teammate? Fourth, the ability to listen. And I think that, that's something that's certainly overlooked. Being a good listener in this environment is very important, especially with all the issues with diversity and equality in the world. We need to be more compassionate and put ourselves in the shoes of other people. And when you think of it, and I think sometimes of attorneys and even CEOs, how many people know how to listen? And that's one thing this pandemic taught me in the boardroom, and the diversity in the boardroom being very important. Listening to people, because what were they saying? I wanted to keep the banks open, and they were saying, no, it's dangerous. They were fearful. And we need to listen and listen better and listen to all the constituents. And finally, be grateful for all the gifts and opportunities in your life. Being thankful and being grateful is a source of happiness. Learn to give back to your community where you do business. We live in the greatest country in the world, and the New York, New Jersey metropolitan area is one of the best places to do business. And as leaders in our community, we need to be that shining light that makes a difference to all whom we touch. Our people are out in the community all the time. It's like I said earlier, it's part of our brand. And they are being significant. They're being servant leaders. They are striving to be of value. Our foundation awarded over $5 million to nonprofit organizations in 2020. Giving back to the community means much more than writing checks. Our employees lend their time, talent, and treasure to worthy causes and local nonprofits. And we've made many investments in Summit and New Providence and Springfield. You know, the first of which was the football field in Tatlack, Investors Field. Others include the volunteer ambulance headquarters, the gym at the rec center, where I have the pleasure of still playing basketball, played there last Saturday before going to the Peppercorn for breakfast. And we continue to support the Concert on the Green in the summer and many of the not-for-profits in town. Being a good neighbor and a strong corporate citizen is part of our DNA, and it's the right thing to do. I have a plaque in my office that says, do the right thing with the right people at the right time. And as Bob Cashel says, you can do good and do well, but anyone can be successful and make a good living. As Churchill said, you make a living by what you get, you make a life by what you give back. And it is only moving from success to significance that allows you to create something special. It allows you to create a legacy and a purpose for yourself individually and also for your teammates, your employees, and your customers. And as the late Billy Graham once said, the greatest legacy one can pass on is not the material things accumulated in one's life. They will soon disappear, but rather a legacy of giving back, of character and faith. And as a businessman, I'm fortunate to have, my Catholic faith as a foundation that has guided me during my career. And at work and in life, nothing's perfect. We still got miles to go. We made a tremendous amount of progress from the mid '60s to 2000 to the year to 2010, 2011. Seems like the past 8 years we've taken some steps backwards, but we still have made tremendous progress, and we shouldn't get discouraged. I think, like I said earlier, I don't want to be better today. I want to be better today than I was yesterday. And no matter where the journey takes us, whether it's life or business, life will be good, and we should always be thankful for the many blessings in our life. I've covered a lot on this. I talked about leadership, the economy, Investors Bank. So now I guess I'd like to open it up for some questions and see where we can go from there. I got the picture online, so we're
great. Okay. Thank you, Kevin. Let me remind everybody, if you want to ask a question, you have to raise your hand, and that's on the reactions button at the bottom of your screen. So let me kick it off first by being the first one to thank you, Kevin, for a truly inspiring talk. It was not just about banking, it was about life and being successful and outreach and helping others. And I have to say, personally, I'm not surprised to hear this message from you, because Kevin and I usually only see each other on the morning after a blizzard. He and I live across the street from each other, 3 doors away. And it's not unusual to see Kevin out with his snowblower, blowing the snow off, with a deep snow, helping the neighbors on his side of the street. And I often do it on my side of the street. So we help our neighborhood. And also, Kevin, I was pleased to hear about your connection with St. Benedict School in Newark. As you probably know the Student Partner Alliance and Maggie Momber. They're very connected with that. And she was a speaker at Ogard a couple of months ago. And we heard a lot about St. Benedict School. We saw a video that those kids made that were part of the program. So, I mean, it's just wonderful to hear from people that are paying back to the. So, yes, thanks. Go ahead.
One of our, we partner with the Student Partner Alliance.
Yeah.
We are mentors.
Yeah.
One of our business, Omari Frazier, and individual lending offices mentor some of the students as part of that Student Partner Alliance.
That is
so it's
wonderful.
a very good program. And I also sit on the Scholarship Fund for Inner City Children that supplies a lot of scholarships at St. Benedict's Prep.
Excellent. It's a great example for all of us. I really appreciate that. So, Larry Cunningham, you're next. Oh no, I'm sorry. Sri Srikantan is first on the list. So, Sri, there you go.
Okay. Thank you, Mr. Cunningham. I had a general question. What's your take on the disconnect between the Wall Street and the Main Street? You shared a rosy picture, most like a sermon, kumbaya moments. But if you look at the society, it's not that way. It depends on where you live. I think, I always say we all live in this Disneyland. Life is good for us. But majority of the people, it's not good. And this problem is exposed after the pandemic. It's become worse and all the wars and things have come to light. And what do you think the reason for the disconnect? And also from an ESG perspective, which you did not talk about, the environmental, social, and governance aspect of it, the responsibility of financial industry like the Diamonds, Moynihan's, Finks, and Solomons, so on and so forth. I think is enough being done from a social responsibility point of view? It's good to say everything is great, but it's not.
Yeah. Well, first of all, the focus, first of all, in 2008, 2009, in that recession, bank was a four-letter word. The bankers were the villains in the first recession, in this century, the greatest recession. And, the subprime crisis, Investors Bank never made a subprime loan. There's been many books written about it. Basically, they almost, brought the mortgage loan, the safest loan in a bank's portfolio, almost brought the country to its knees in 2009 and 2010. And banks, like you said, Wall Street was out of control. It was poorly leveraged. It was taking advantage of bad lending practices. The mortgage bankers, Merrill, throughout, whether it was Bear Stearns or Lehman Brothers, and then it was Fannie Mae and Freddie Mac. They were at the head of the parade. And they're still in conservatorship. So I think this time around we're in a different spot. What the bankers did with the PPP loans, and what the Treasury did, and what Treasury Secretary Mnuchin and Fed Chairman Powell did, what the CPAs did, in allowing us to get all that money out and lax our lending, requirements, really saved the country. Because if you imagine just shutting down lending during this pandemic, it would have been a nightmare, and it would have been far worse than the 2008, 2009 recession. We're seeing a tremendous, hockey stick recovery here in this environment. GDP has bounced back. Every estimate that we were looking at in March and April has improved by the fourth quarter. We took $60 million, $68 million in reserves in the first 6 months of the year. In the fourth quarter, we had a credit of $2.5 million in our provision because we had recoveries. So really, what I said earlier, it's a tale of two cities. The first half of the year and the second half of the year, we had record earnings in the fourth quarter. And then we had record provisions. We were still profitable, despite the provisions of $60 million. But it is, certainly, the bankers and the Federal Reserve and Treasury, the SBA, were the heroes during this recession. We kept people employed during this recession. Now, having said that, your other question about the disconnect of Wall Street and Main Street, it has certainly been that, and it certainly continues to be that. And that's a frustration on my part. Like here it is, we have a philanthropic budget that is almost double some of the national banks here in New Jersey. Yet we try to be the whole idea of the Business Roundtable, talking about things like ESG and the environment and social issues and governance being so important, and that the shareholder, Milton Friedman, the shareholder is not the most important important constituent. Well, you know, for 15 years here, we've been a good corporate citizen out there in the marketplace, and it's part of our brand. What the Business Roundtable did with Jamie Dimon and other corporate leaders said, 18 months ago, we've been living it forever. And I think that's the disconnect, but that's the frustrating part. Why do people, I don't want to make this a commercial here, but why do people bank with these national banks if they don't agree with their policies? And I think part of it is convenience and things like that, where people don't, it's really laziness and inertia sometimes is our biggest competitor in getting people to change. But I think at the end of the day, I think, Wall Street is certainly doing a better job than it was 10 years ago. There's still, like I said earlier, with respect to ESG and things of that nature, a long way to go. And, it's funny, this morning, there's this new investment vehicle that's out there. It's been very popular. It's called a SPAC, Special Purpose Acquisition Company, I think. But again, what value does that bring? You know what I mean? It's a way of just creating money and, just doing a deal maker. I'd rather invest in a private equity and a technology, directly, as opposed to having this third party involved and just creating fees and legal fees and investment banking fees, for those types of vehicles. But they're public companies. They're very hot now. My son, who works in real estate development, and doesn't really follow Wall Street, he came to me last week for dinner. We had dinner and he was talking about it. So it's, you have to worry. I think Joe Kennedy once said, when your cab driver is talking about stocks, that's when you have to worry. You might be hitting a bubble.
Thank you. Larry Cunningham.
Okay. Can you hear me?
Yes.
Kevin, two questions. First question is the one I always try to figure out is, will the federal government ever reach a debt limit? When does the debt finally become important?
Yeah.
It's already, I think, 25 trillion right now, or close to that.
Yeah.
Second follow-up question would be is what capital reserve ratio does a bank target itself toward?
Yeah, we're over 10% now, and we're targeting 8.5% and 9%. We bought back almost over, probably since 2015, over $1 billion in treasury stock over that period of time, and we just raised our dividend. But I think you want to be, around that 8%, 9%.
Okay.
Some banks drive it a little lower, but your regulator gets a little concerned if you get below that 8% mark. So I think 9% is pretty comfortable. It's a lot better than it was 10 years ago. And you're seeing that in light of this crisis, like when the banks took their big reserves in the first half of the year last year, especially those with large credit card portfolios, they didn't have to cut their dividends. They were able to maintain their dividends and continue, their treasury work. So it wasn't a problem. I would say, with regards to the national debt, you're going to see, continued growth in that department. Here it is, pre-pandemic. Trump's administration had $1 trillion deficit, with the tax cut. So it's both sides of the aisle had lacked discipline. The last time we had a balanced budget was 2000 with Newt Gingrich and Clinton. And, since, the Iraq War, 9/11, between Bush, Obama, and Trump, it's been a drunken party down in Washington. But believe me, we were worried more about deflation than inflation over the last 10 years. So I think the Fed today is at a position where, hey, I can go to 3.5% inflation, 4% inflation, and it's not going to be a problem. I'm more concerned, with paying off the debt, being able to finance the debt, and the higher inflation hopefully will keep real interest rates down.
Thank you. Kevin, let me just interject here. Michelle told us that since we started late, you'd be able to stick around with us for a while, but I don't know what your schedule is. So when you call time, that's fine with us. Otherwise, we
I'm
still
here.
have.
I'm here unless you start asking tough questions.
Okay, well,
No,
Jim
beat me
Blinn,
up.
Jim Blinn will toss you a softball right now. Go ahead, Jim.
Well, I did find your talk very interesting and inspiring. And so I don't know if you think of this as a softball or not, but I was curious as to how your bank is addressing redlining in New Jersey.
Well, I mean, we're going through a CRA exam, just, recently right now. Yeah. And it's part of the, lending, to low and mod tracks is very important. I would think it's a focus of our lending. And it's, we've always had, strong ratings, satisfactory ratings, high stat ratings regarding our lending. So, it's, I think it was more of an issue 10 years ago when people were taking advantage of the subprime, product and lending in those markets and charging high fees and giving people loans that they couldn't afford. I think now redlining, it's such a focus of our regulatory teams that it hasn't been an issue, in the industry for a while. Can we do a better job lending in the low and mod? Yes, you can always do a better job, but when the rubber meets the road, it's a mathematical calculation. But there are a ton of programs with the Federal Home Loan Bank, of which the board I sit on, where they will sort of like underwrite different programs to lend in those economic zones. There's also, we partner with the United Counties Economic Development Authority, and they make loans, and they're a a financial, I think it's an initial CFDI, I think it is, and they make loans to startup organizations. We made loans post Sandy. We made loans connection with the with this pandemic, and we fund them. And what we do is they provide the capital for the loans. We underwrite the credit quality. So if they want to make $4 or $5 million in loans, we'll give them a grant of $250,000 to cover the allowance, what they estimate to be their losses on that area. And they'll return that money to us if they don't use it in the loss calculation over the life of those loans. So that's a way for us to make small business loans, to minorities, to the low mod census tracts in, say, Essex County, Union County, in our market area. And that allows us to get credit to fulfill our obligation, under the CRA guidelines. So it's a lot of different ways we can do things. For example, we also have a first-time home buyer product where we'll make a loan to a first-time home buyer and then make a $1,500 second mortgage that is forgivable. And that counts as 2 loans in the census tract. And then we'll write off, if they pay the second loan off, if they have a certain amount of payments over a period of time, we'll forgive the second loan. So there's a lot of different ways, a lot of different bank products to address that redlining issue. And I think, it depends. Again, you always, like, we're in the middle of an acquisition, you always might get some community activists in New York City that might just challenge what we do. And it's always the case. And then you have to go through the hoops to get your transaction approved.
Thank you.
Thank you, Jim. There's a chance that some people on this call don't actually know what redlining means. So why don't you just say 2 sentences about what that means?
Yeah, I mean, redlining is basically where you do not lend to certain geographies because of whether it might, years ago, because of the racial or economic makeup of that population. So in other words, you might want to take deposits there. Yeah, I love your deposits, but then there's a conscious saying, oh, I don't want to, like, for example, I don't want to lend in Newark. So, but I have branches in Newark and I'll take the deposits, but I won't lend there.
And I guess it's called redlining because somebody has taken a map and drawn red lines around certain neighborhoods, and you have different policies for those, and yes, et cetera, et cetera. So thank you. So Pete Bolton, you're next up, and I'm going to ask you, you can unmute yourself, Pete.
Thank you very much, Kevin, for really an inspiring talk. But looking ahead, if you could yourself, if you have some kind of metric, it's not deposits or depositors or whoever for banking, can you imagine that the number of people you hire relative to that metric, how that's going to go in the future? I assume it will decrease, but you're the one who would know much better.
Yeah. Well, certainly there will be fewer branches in the future. And, you know, the real drive is going to be towards consolidation and driving efficiencies. So right now, you know, when we look at our total revenues, our total operating costs over total revenues, that's what we call our operating efficiency metric. And, you know, to be a strong operating bank, it's anywhere, you know, from 45 to 55, depending on the makeup of your businesses. For example, the wealth management business might have a higher percentage because you have higher price, you know, investment offices and, you know,
Right.
client reps.
Right.
But in a core bank, you know, community bank, if you can get down under 50%, that's a good place to be. So that's a metric that drives, and that metric will, you know, it's a function of two things, expenses and revenues. So if you're in a tough interest rate environment, like today for some banks, the low rate environment is hurting their net interest margin. So that hurts your denominator. So you can keep your costs flat, but it's still going to go up because your cost of constant and your denominator has gone down. So, you know, the ratio rises. But I think with the consolidation of the industry, the reduction of branches, that's the low-lying fruit over the next 3 to 5 years. You know, we have too many branches, you got too many banks, too many hospitals, and too many colleges.
But does that mean that there will be less people hired for the same amount of business? Perhaps not only in banks.
I think it'll be a shift in resources. You'll shift. I think there needs to be a significant investment in the technology platform. So what you'll see is, you know, the people will be making more investment in personnel and technology, more investment in business bankers, you know, in a more seasoned banker as opposed to teller and branch staff. So I think, you know, there will be fewer people working in banking over the long term, but I think it's in the short term, it'll be more of a shift in resources.
Thank you very much. And may I ask one more thing? You seem to have ease of use as one of your goals in your online relationships. And I would certainly like to applaud every step you make in that direction.
Yeah. Even for me, you know, it's a challenge, you know, and I work in a bank.
Thank you very much.
Thanks, Pete.
Okay.
So Ed Atkin, you're next. You have to unmute yourself.
Two questions. Do you plan on doing any more acquisitions in banks? Are you in Florida? And also, will interest rates improve anything from, like, you're probably one of the hires at 0.10%?
Yeah, well, certainly we did the acquisition last April. We're in the midst of an acquisition right now. We acquired the franchise of Berkshire, New Jersey and Pennsylvania franchise of Berkshire Bank. We announced it in the fourth quarter of last year. We expect to close it probably in maybe late April, May. It is 8 branches in Mercer County, 6 in Mercer County, 2 in Bucks County. It'll bring us into Pennsylvania. It's about $600 million in deposits, $300 million in loans. It's a you know, cash deal where we're just buying the assets and liabilities, and we expect to close 4 of those branches and consolidate them in our branches to improve the efficiency and the profitability the franchise.
Thank you. Ian Lutz.
Yeah, excuse me. Cryptocurrency is growing in popularity and so on. We've got J.P. Morgan and Goldman and so on setting up cryptocurrency departments and so on. I wondered what you think of it, what investors is doing about it, and whether you see it as a threat to our economic system and yeah, what your general opinion is of cryptocurrency.
Yeah, it's funny. Jamie Dimon, I think 2 years ago, kind of said, "Are you kidding me?" An attitude towards it, and it's changed quite a bit in the last 18 months.
Yeah.
I'm not an expert on it. I talk to my kids about it. There's major regulatory concerns, regarding the nature of it. If you look at the higher users of it, where their locale is, it's in the less developed countries, even the North Koreas, countries like that, Venezuela, the less stable type, less trustworthy type
Yep.
economies where you want to be. So certainly, it will evolve though, and I think it's the wave of the future though. That's my personal gut on it.
Yeah.
And I'm gonna start investing in it. I just haven't sat down and studied it enough, but I certainly think it should be something that, you can't ignore it.
Yeah.
And I think it's coming. And there's a bank over in New York, very well-run bank, Signature Bank, that has kind of found a little niche in that business, and they've driven a ton of deposits in. But it's almost like the cannabis world now. Banks are tipping their toe in, looking at it, but you got to be very careful of the cybersecurity, the reputation risk, and also the regulatory risk. In
Good.
the world
Thank
that we
you.
live
Thank you very much.
Thank you. Okay, so it's now noon. We'll take one final question. Sri has had his hand up for a while to ask
in.
one.
Well, I can stay a little longer if you want. I don't want to shut anyone out. Okay.
Well, okay. We'll do our little ceremony, and then if other guys want to stick around longer, that's fine. But Sri, you get one more quick question before we do the ceremony. You have to unmute again, Sri.
You're on mute.
Yeah, go ahead.
Just a quick follow-up question. The banking things that went on from a business operations point of view, I understand. I think the banking industry, specifically financial industry, is not really, pulling their weight in the social aspects of that. I work for JP Morgan. I reported 2-3 levels down to Diamond when he was with Smith Barney. So I spent most of my life in there. Still, I don't think they are pulling their weight. Now, especially if we look at the social disconnect. It's nice to be kumbaya and pat ourselves on the back and say we are exceptional. We are not. I think, it's like alcoholism. So we got to people who are comfortable, that's fine. So from social responsibility point of view, I want to see now what your reaction is. Are the banks, financial industry is doing enough?
Yeah, well, like I said earlier, they can always do better. I would say the mission of the larger banks, they're international companies. During my public accounting career, I worked on Deutsche Bank, Bankers Trust, and Citibank. I spent 4 years on Citibank right after the prince in Saudi Arabia bailed them out in 91, 92. And I think there's certainly it's a capitalist system, and they're focused on their shareholders and shareholder return. That's that Wall Street. What's in it for me the next 5 minutes. But I think in today's time that's evolving, and it is better than it was 10 years ago or 20 years ago. And I can't certainly as a corporate citizen, the commitments that after some of the events of the summer, whether it be Minneapolis or Seattle or Portland, it is clear that the major corporations, certainly the financial services industry, made significant commitments to trying to level the playing field. And I think, to me, you know, in my discussion, we've expanded our diversity group within the organization. You know, it's a journey. You know, nothing's perfect. You need to work on it day by day, and treat people with respect, and be compassionate of where people are in those other people's shoes. You know, you can't, you know, the whole thing on say on pay, CEO pay, all those good things. When you talk about fairness, Abraham Lincoln said, fairness is not given, it's earned. Forgiveness is given, not earned. And when I get into a conversation with one of my kids or some of the younger people, you know, and they start talking about fairness and CEO pay isn't fair or whatever, all bets are off. You can't win that argument, because what's fair to a college age student that might, think that CEOs are all overpaid, and what's fair to someone like myself that's worked very hard for 45 years, they're two different things. Two different things. And I think it's the opportunities that we provide to people that are most important. And that's why, you know, not-for-profits like the Student Partner Alliance, you know, the Scholarship Fund for Inner City Children, that are in there trying to create opportunities and level the playing field. I mean, I didn't have the same opportunity growing up in Jersey City, you know, high school educated parents, that people in Short Hills and Summit had in 1972 when they graduated high school. I mean, you should have seen my application to Dartmouth. You know, it was handwritten. No one reviewed it, and I just sent it off. You know, and I think what I've done with my children, my wife has done with our children, in the tutors and everything that we've done, SAT review classes, you know, and all that good stuff to get them into Bowdoin, Colby, and two boys went to Holy Cross. It's not fair, but how do we level that playing field? And I think that's the opportunities that corporate America has to step in and get the job done. Because the government has been trying to do it since the Civil Rights Bill and Johnson in the 60s was passed. And it really, if things are as bad as people say it is today, then we spent a lot of money and we failed over the last 50 years. But I think we made some progress over that time. I know things are better, but they have to get better. And we have to level the playing field, you know, for everyone, so that it's equal opportunity for everyone. Not equal results, equal opportunity for everyone.
That's great. So Bobby, you are the last one with a hand raised, so I'm going to let you ask your question before we end it. You have to unmute, Bobby. Okay.
My question is a bit broader. We have in the world two systems going. One is a democracy and the other is a communism or totalitarianism. Do you think that the model under totalitarianism is better or worse than model under democracy for the values that you talked about, for the values you talked about? That's my question. Very broad question.
Yeah, you know, and that's the issue. Like when I look at Europe, you know, and they're like, you know, it's funny. During the last recession, I said we're one generation behind Germany, 2 generations behind France, and 3 generations behind Greece. You know, and you look at Argentina. You know, Argentina was a great economy in the 1900s, and then, you know, in the early 1900s, and then as they moved to that socialist model, it went backwards, and then there's, you know, it became a third world country. You know, I think the natural evolution of capitalism is moving towards, you know, a socialist model, and we're on that journey right now. And I think every society, you know, comes and go. And I think, you know, the Western, you know, influence, the United States century, I think is over. I think, you know, we're on a road. Probably it started in the late 60s, you know, with some of the things that happened then. And it probably takes 100, 150 years for an empire to decline, whether it was the Roman Empire, the Greek Empire, Charlemagne, the Ottoman Empire, whatever it might have been. And I think, but when I look at where we are today, I think, capitalism has certainly created the greatest country in the world. And I think, I don't want to make excuses for our country and what we've done and what we've accomplished because, one could say, yeah, we have the original sin of slavery, but certainly, what we've done and the generosity of this country, we fought communism, we defeated fascism, we've created a better world we've been the most generous country in the world, without a doubt. So in some respects, can we do things better? Were we self-interested, took advantage of people? Certainly. But I think, when I think of all the good things that have come out of this country and the technological advancement, whether it be the electricity, throughout the last, 100 years, when was the last time something good came out of Sweden? They're a great country. Everyone there is happy, but I don't see many things coming out of some of these socialist countries in Northern Europe, the way we create things and make lives better. Well, look at the pandemic. The development of the vaccines. I mean, that's a tribute to this country and what we can get accomplished when we put our heads to something. So, we're on a move to be, more socialistic, and it's going to be it's going to increase the debt. It's going to, slow down innovation, but I think, it'll come in swings. You had FDR and his progressive programs. You had, before him, you had, who was the president that was during World War One?
Wilson.
President of Princeton.
Wilson.
And it swings back and forth. I would say, I guess at the end of the day, I'd say I'm a little disappointed in our leadership in Washington, the three post-baby boom presidents. Clinton had a bad sense of values, and his shenanigans in the White House. Bush, outsourced the presidency to Cheney, and Obama I don't think did a good job over the 8 years, working together and pulling the country together. And Trump, he just wasn't the character that you needed. His policies probably were good for business, good for the country, but his character was below, expectation, and he didn't grow into the job. So when you think of our post-baby boom presidents, there's a real crisis of leadership in this country, and I'm waiting for someone to step up, and hopefully some West Point or Annapolis graduate will step up and turn this country around. That's what I'm looking for.
Thank you. So with that, I'm going to invite Jay to come back into the picture here.
I'm unmuted.
You're unmuted.
Yeah, Kevin, that was a fantastic talk. It really was. It's inspiring. I guess what I have to do is get better and better every single day because you said so.
Yeah.
Anyway, we want to thank you very much.
Yeah, there's only one other result is if you're not getting better, you're getting worse because you're never going to remain the same.
Yeah, you're right. I'm getting older too. We want to thank you very much and give you a certificate, which someone will display in a minute, I hope. Do we have that certificate?
Here it comes.
There it comes. There we go. Kevin, it's customary for us to do a certificate for you in appreciation for your wonderful talk. If you look on the lower left side, you see an orchid. I don't know if you know this, but the orchid was the flower that was a symbol in New Jersey grown here in Summit. Summit was sort of the capital of that for years gone by. So let's all have the wonderful salute and thank Kevin for his very good talk.
Thank you.
Kevin, I hope you can come back.
Yeah, okay.